It is Monday morning and the chaos continues. Silver is sitting at $30 an ounce. Gold has dipped below $3,000 an ounce. We've got more tariffs inbound. Where do we go from here? Let's get into it.
The worst day on Wall Street since the crash of 1987.
We're now down 43%.
This could be the most serious recession in decades.
Protect your retirement with gold and silver IRAs. Learn more at sdbullion.com/IRA. Thank you so much for watching. I do sincerely appreciate it. I want to start with gold price sitting at $2,988. It's down around $56, almost a 2% drop. So gold moving lower today. Silver actually moved up today. Now, initially last night, silver did tank. It went as low as $28.39, but then it swiftly recovered. It's actually up for the day, sitting at $30 an ounce at the moment, which means the gold-silver ratio is now back below 100 to 1. We'll see how long this lasts. But what is going on with tariffs and all of the news today? Trump is fighting back against China and their retaliatory tariffs. In a post today, he writes, if China does not withdraw its 34% increase above their already long-term trading abuses by tomorrow, April 8th, 2025, the United States will impose additional tariffs on China of 50% effective April 9th. Additionally, all talks with China concerning their requested meetings with us will be terminated. Negotiations with other countries which have also requested meetings will begin taking place immediately. Thank you for your attention to this matter. We will have to wait and see how all of this plays out over the next few days, but it's looking like the market volatility may not be over yet. Speaking of market volatility, cryptos have been getting hammered over the past few days, with Bitcoin falling an additional 5% today. You can see here the top assets by market cap. Silver has now passed up Bitcoin on the list and sits at number 8. You can see silver's market cap here, 1.682 trillion compared to Bitcoin's 1.553 trillion. So if Bitcoin continues to fall, it's possible that silver will remain ahead of Bitcoin for the foreseeable future. Although with both silver and Bitcoin being very volatile, I think it's more likely they're going to jockey back and forth in the coming weeks or months. But who knows? It's good to see silver back on top for now. Gold, of course, remains soundly in the number one position with a market cap of over 20 trillion. It's no wonder why central banks around the world love buying and holding gold. The headline for this Kitco News article, which was released today, reads, "Gold price pullback is an opportunity to enter highest conviction long position," according to Goldman Sachs. Here they write, the banking giant's analysts see the sell-off in gold as an entry opportunity, and they continue to recommend long positions in the metal as their highest conviction view in commodities. Goldman attributes the dip in gold prices to short-term technical factors, such as position liquidations due to the equity market sell-off, along with some rotation into alternative assets, but the bank sees firm support for gold over the medium term. So basically they're saying what's going on with gold right now is similar to what happened in 2008 and 2020 when we saw the stock market go down. Gold and silver went down initially, but then they rebounded in the coming months. So this is a good buying opportunity with these lower prices. The analysts believe the US government's reciprocal tariffs will weigh on global growth, and they reinforce the case for defensive assets like gold. They also write, we maintain our 3,300 an ounce gold year-end forecast and our forecast range at 3,250 to 3,520, reflecting mostly upside risks to investors' positioning. Goldman analysts wrote in a note, we continue to see risks relative to our forecast skewed to the upside. Further support for the yellow metal will come from structural demand from emerging market central banks, along with increased inflows into exchange-traded funds due to recession fears and Federal Reserve rate cuts. They also noted that gold and other precious metals were exempted from the new tariffs, and they do not expect the Trump administration to tariff it in the future. So there you go. No tariffs on precious metals. That's not going to really affect gold and silver too much. It's going to be the central banks driving the demand for gold as they continue to buy more. And I just want to point out, another article writes the People's Bank of China added 3 tons to its gold reserves in March to 2,292 tons, the 5th consecutive month of reported purchases. So China is continuing to buy more gold, and I'm sure other central banks around the world are following suit with all of this chaos going on. So Goldman Sachs sees gold price actually finishing the year about 10% higher than it is right now. But in the meantime, we are seeing the price fall. Gold now down $67 on the day. How much lower can gold go? Well, if we look at its performance so far in 2025, you can see on January 1st, gold was $2,624. So it's still up about $350 for the year. I think it could probably go down another $100 or $200 before it settles, just depending on the news, depending on what happens with tariffs, but I don't think it will go below where it started the year out. Silver, on the other hand, I think we could see it continue to drop. It started out the year at $28.84. It's now sitting right around $30 an ounce. Could it go below where it started the year at? I do think it could. Maybe it could go down to $25 an ounce at the low. It just, again, depends on what happens with the news this week and for the rest of the month. As I pointed out in my video last Friday, we're probably not going to be seeing the Fed cut rates at the next FOMC meeting on May 7th, but rather we're going to see a rate cut on June 18th. Only a 3% chance that rates remain the same at the meeting in June. So the Fed cutting rates while inflation is still relatively high is super bullish for both gold and silver, and the markets are forward thinking. So they're going to start pricing in this rate cut in the next month or so. So I do expect to see gold and silver level out at some point and then move higher, and I do think both of them are going to end the year considerably higher than they are right now. If you are a stacker like me and you're wanting to buy more precious metals, then this dip in price is a blessing. It's one of the biggest drops in silver we've seen in over a decade. So you can buy silver a lot cheaper today than you could last week. And with the gold-silver ratio being so high, I think silver is definitely a better purchase right now as compared to gold, although I think both of them are a great alternative to just holding cash. Thank you so much for watching, and I will see you all in my next one. Silver Dragons out.